Hey there, Lisa. Great to see you.
Hi, Chris. How are you?
I'm doing great. It's a short week and trying to fit 5 days of worth of work into four, but I think that's the
Uh,
curse of a holiday, I suppose.
that's life.
It's great. We wouldn't trade it, right? Did you do anything fun for the
Mm.
holiday?
I didn't. I actually really like working on holidays because it's so nice and quiet. Email's quiet. Everything's great. I actually get a lot of work done on holidays.
That's
So
great. People leave you alone, that's for sure. So, well, welcome everybody to our time together on this Ask a Bookkeeper training. We are grateful to be with you, excited to spend some time with you today. And we want to just jump in and get going. So maybe just lay the ground rules for those of you that haven't been here before. These are similar to our Ask a Pro trainings every Tuesday and Wednesday. But today is just a little different in the sense that we want to hone in on bookkeeping questions and bookkeeping related items. So if we have tax questions or planning questions or implementation questions, please come back to our Tuesday or Wednesday Ask a Pro. But today we want to open up the forum and let you ask any questions that you might have specifically about bookkeeping and how we might help you with bookkeeping, how we might keep you on the right track. So if you would open up the Q&A, throw all of your questions into there. Managing the chat is a little problematic for us. It's harder to keep clean. So if you wouldn't mind, any of you that have questions, throw open your Q&A, get into your Q&A and throw your questions there into the Q&A box. And let's try to keep things honed in on bookkeeping today. I want to share something with all of you, maybe just as you start throwing your questions into the Q&A box that might apply for some of you and it may not apply for others of you, but something that I think is a really exciting development here at Tax Hive. We actually met with a company yesterday who has a really interesting and really well thought out interface with QuickBooks. If you invoice out of QuickBooks and you send invoicing out of QuickBooks, you're tied to their merchant account, which isn't necessarily bad, but usually they're a little bit more expensive. This company has an interface that you can still create all of your invoices in QuickBooks, but then you use their little widget to send and receive those invoices. And by so doing, you can get a different merchant account and save money on merchanting fees. And so we're going to have that coming here probably within the next couple of months. It's just a free widget that everybody will get. So if you do use invoicing as a feature in QuickBooks, if you're kind of point of sale, it doesn't really help you. But if you do use invoicing out of QuickBooks, this will be a huge, huge, huge potential pickup for all of you. So keep an eye out for that. That's coming here in the next couple months. So again, throw your questions in the Q&A box and we'll unpack them there. But Lisa, kind of along that line, a recommended software for bookkeeping. There's a lot of them out there. People oftentimes want to know what should I be using? What would you recommend for, and what might you recommend against?
Right. So I would definitely recommend using a computerized accounting system. Half of the time, I'd like to tell people 50% of the process of bookkeeping is learning the software. So if you are good at it, and you're like, I know bookkeeping, QuickBooks will be fine. You need to know how to do the things in QuickBooks so that you don't get errors on the reports. What is the best way if you're going to use invoicing that you have to record the payment against it or it shows open forever and messes up your sales? And so how do those payments then get into the bank if you're just letting it auto download from the bank and it doesn't match? You have to know how to make the things talk to each other, take the proper steps to make all the widgets work. So QuickBooks Online, in all of its variety of subscription levels, is a great place to start when you know your business is going to have a regular recurring source of revenue and you need those extra tools. Are you a service-based business and need to invoice someone at least a couple times a month? And you're like, well, right now I just have them send me a check, or I just send them something I make in Excel and they like mail me a check or send me a Zelle payment. And you want to just kind of up your professional game a little bit, maybe between this widget that Chris is talking about and also with the QuickBooks invoicing options. you can just look a little more professional and have a little better accounting. Now, let's say you're not at the point of wanting to pay for an accounting software yet. Maybe it's a side hustle, maybe you're not quite sure where you're going. Wave is a free service. It is a similar enough platform that if you're willing to invest the time learning how to do it, you will be able to transfer the knowledge you learn using a free software like Wave, which I think it's called waveapp.com is where you'd find it. If you use that software, you'll be able to transfer that knowledge into utilizing QuickBooks a little more efficiently. Whatever software you choose, even if you decide to use Quicken, make sure you have read a little bit about it or watched a couple of videos on how to use it properly. I think that's one of the things is that so many of our clients come to us and they're hiring us for a cleanup, not because the books aren't like the data isn't in there, because they've made a mess of it. And that comes from we're just running headlong. We put together 3/4 of the table without reading any instructions, and we're trying to figure out why the legs are wonky. Probably would have helped to have read a little instruction to get a little bit of knowledge before we move forward. So follow a couple of videos, make sure you're like, yes, what I thought was how you use it is correct. Otherwise, let QuickBooks show you how they want you to use their software, because ultimately the software is going to win because it has all of the like if you're getting reports out of it, you can't do whatever you want and expect to get the reports you want. QuickBooks is like, no, you have to do it our way so that it reflects the way you want it to on the reports.
I think one of the big things there, Lisa, that you hit on, we often say good data in, good data out. And when data is not done properly, you're not going to get the right information out.
Yeah.
QuickBooks is really good when you do it right. But like pretty much everything, when you don't do it right, it causes problems. If you don't use QuickBooks, Zoho, FreshBooks, Xero, there's some others out there that you can use. If we do your books, we are going to use QuickBooks Online. So we're going to stick to kind of the gold standard when we do it. And that's what we're going to do when we do it. Lisa, and again, everybody throw your questions in the Q&A boxes where we want you to see them. But Lisa, if we do a cleanup for somebody, what are they going to need to provide to you to be able to get in and do that cleanup? What's kind of the initial lift for them as a client? If books aren't done right, if they know things are off, what do they need to be prepared so that you can actually step in and help out?
Right. So when we're creating a profit and loss, a balance sheet for you to utilize in your tax prep, at the very least, every business needs a profit and loss. If you're still a Schedule C small, at least you know you're creating that. And what you've asked us to do is to take all the variety of ways you have spent money on your business and corral it into a report that is easy to use by a tax professional to put onto a tax return. So we have to put it into a kind of specific format. And with that, I'm going to ask you, everywhere you spent money on your business, I need to know about it. Were you running this out of your personal bank account at the very beginning of the business because you didn't think about setting up a separate account? It wasn't quite there. Then I'm probably not going to want to look at all your personal activity, but I would like you to be able to look at each statement, bank statement, and to tell me, these are the charges related to my business. This is the money I received from my business. And you can then say on a month-by-month basis, using every statement that you have connected with your spending capabilities, where did money related to the business come in and go out? You can have personal credit cards. You can have your husband or your spouse's other accounts. You can have a variety of places money's coming in and going out. Venmo, Cash App, all that. Be prepared to not only give me those transactions, probably statements as well. If you finally get around to opening the business account and you have those statements. Now, let's say, and this is pretty common, you open up an account, something happened, the account gets closed. You can go back to the institution and get those copies. I'm going to actually probably make you do that. So know that you can't just say, well, I don't have them. Because if you are basically saying I don't have them, then you're going to forego all of the expenses and the income from being included in your books. And then when you sign on the tax return saying, yep, this is materially correct, you're not saying that the number, that this is the amount of tax I owe. You're saying all these numbers are materially correct as I file them on this return. Well, they're not if you've omitted a bank account, a credit card, and the government knows about those accounts. So you probably don't want to play that game. I would recommend getting all your records. So you got to go back to the organization you got the card or the account from, get the statements, get the data, and then we're just going through. Be prepared to separate your personal from your business. So if you're like, I couldn't tell you on a monthly basis which transactions were business and which transactions were personal, this is where we highly recommend you get it all into one business account, or go open a separate personal account, even if you're going to put in $2,000 to start and have a very small side hustle for 5 years, because then you know all the activity is there. Even if it doesn't make money and you keep constantly pushing more cash into it so that you can buy what you need to for your business, do that, because we need all those transactions and it's very easy to forget which ones are which. And sometimes you look at the statement, you're like, oh, it's easy. It says on there, it says it's this, it says it's that. Sometimes you need to look at those statements closer and say that it shows you garbage transaction information. The vendor didn't even put their proper business name on there. You don't know what that is. You're like, I don't know what that charge was for. So, records. Records are going to be the number one thing I'm going to ask you for. And then you telling me what is business and what is personal. And that, I think, is the hardest part for everyone doing a cleanup. So here we are at 9 months in. If you haven't done anything for 24 and it's looking like you might not get that done, sooner rather than later, will probably save you a little bit of pain so that you're not having to redo this under under a time crunch in March.
Yeah.
Or 3 weeks before you need a home loan because you're like,
For
I
sure.
can't remember. I don't know.
And that happens all too often, doesn't it?
That unfortunately is actually one of the major things that spur people into contacting us as they're trying to get loans. They're like, the tax stuff, maybe they can let that go a little bit, but it's the loans that they don't realize they're going to need those tax returns for.
And that information is so crucial to making good decisions in your business. So you want it. Akarsh has a good question here. My company work in the negative, so I'm having to put money into the business. I mark them as owner investment in QuickBooks. Is this the right way to do it?
That's perfect. That's exactly what it is. You're putting money into that business bank account and you're marking it as owner investment. That's not a taxable account. That is 100% perfect.
Great.
So,
and then at the beginning of the business, I made purchases from my holding company. These were furnitures and fixtures for an Airbnb. Now I have a property management LLC that I've marked these purchases in my Wyoming LLC as furnitures and fixtures, as that's what the expenses are. Should I be changing this somehow?
I like how you're doing it going forward. You now have the property management company, so it doesn't matter how many properties you have feeding into it, all the income and expenses are corralled in that one LLC. For the prior stuff, I wouldn't worry about that. We can still report that activity on the holding company as it was direct activity. So I would go ahead and you just record it in that company, and then we see the changeover of the property management LLC, and then it's the net effect of that flows into the holding company. So I think you're doing it fine, and just keep moving forward with the property management LLC. And if you really want to, you can put those two items into a one QuickBooks or Zoho or FreshBooks or whatever platform you're utilizing. Go ahead and put them in the same one. You just kind of want to separate them on the chart of accounts to say these are expenses of the holding company, and this is all the major activity of the property management company. Because they flow together onto the same holding company tax return, that's a good time where you can do multiple sub companies into one set of QuickBooks, so it's not a big deal. You don't have to pay like 5 subscriptions.
Unpack this for a minute, because I actually think this is an important one, Lisa. When do I need a separate set of books, and when can I kind of combine it under one QuickBooks subscription? Because QuickBooks doesn't let me have multiple sets under the same subscription, right? So when could I maybe combine a holding company and an active LLC that I'm managing a property, and when do I actually need separate books?
Right. So what I like to say is, one, I'm going to ask you, do you have an S corporation? If you have an S corporation or a partnership, then that balance sheet needs to look really clean along with the profit and loss, and it's got the most activity because you're big enough now to be either of those designations. So if you're one of those bigger companies, at this point, it's like, okay, putting any other business in there starts to get really messy. If you have multiple properties and you're going to want to basically recreate that Schedule E column specific to your property, showing the like 10 different expense accounts related to the property, and you're going to have that multiple times, that gets to be a lot. Even if it's not a lot of transactions, the reporting gets to be a lot if you're not utilizing either a very broad version of a QuickBooks Online subscription where you have like lots and lots of classes. But the better way I say is to get the cheap versions of QuickBooks and do separate ones, like put all your properties into one QuickBooks and then run your business out of another one. Unless it was like one property and one not super big business, maybe a Schedule C business plus a property, that's probably okay. So I'm going to probably want you to consider drawing the line at if you have multiple properties, put them in their own QuickBooks. You have an S Corp or a partnership, put it in its own QuickBooks. Or in the event of a situation where you're going to have to give those documents or you're going to sell a business or do something, you're going to have to give them to any other party. You don't want your other personal stuff in there. It just looks really messy. So go ahead and put those in a separate books.
Yeah.
That would be like if you have like a property you're planning on selling or like a property management company you're planning on selling. You don't want to put all of your other businesses in there too, because then you have to give that all as due diligence. So it gets weird.
This is not really a bookkeeping question, but I think we can hit this one. I have an LLC, but less than $1,200 in income. Do I need to file a return? The short answer is if you have an entity set up, you need to file a return. If you don't, the IRS is going to think you didn't, and that's going to set up an issue for them when they see an LLC that doesn't have a return. So the short answer is if you have an LLC, even if you're not making money, you still want to file a return. And Arkash, I'm going to tell you to come back on this one and unpack it a little bit more on one of the Ask a Pros on Tuesday or Wednesday. So come back on Tuesday or Wednesday. You're delving into a little bit more of a tax question that I would tell you, come back and unpack it then. Again, this is a question. You're very welcome. I'm not taking some mileage. I use my personal car, but I'm not taking any draws. So it's okay to mark mileage as an owner investment. Mileage isn't going to be an investment. Talk us, Lisa, where, if at all, should I be keeping track of mileage in my books?
Right. So I typically like to, I mean, mileage is going to be at the end of the year or however often you want to calculate it. You can do it monthly, you can do it quarterly, annually. You've taken the number of miles you drove times the current IRS rate for that period, year, quarter, half year, and calculated a dollar amount. That dollar amount is now an auto expense. That is an auto mileage expense. It's going to go straight on your tax return. You're going to see the calculation to get to the dollar amount, and that is an expense. Now, if you, of course, you didn't pay yourself for the mileage, you can offset owner distributions. So what I mean by that is you've taken some owner distributions throughout the year, or in the case of a business that's just purely investment, you've done nothing but put money in. Well, we can actually reduce that by showing or add to it by showing the amount of additional cash you personally paid for all of the auto gas and maintenance and all of that. And then that is an expense. So the way that journal entry in QuickBooks would look, it would be 1231 is how I would typically do it for the whole year. Expense account, auto expense, $1,297 for, was the calculated amount of auto mileage. And you're going to offset owner distributions or owner investment down at the bottom. I'd even say owner contributions, one of those equity accounts. I like owner distributions. And so then that is going to be the crediting account. So debit the expense, credit the owner distribution account. That's how you record your auto expense. And during the course of the year, when you were buying the gas and the insurance and the auto insurance and the car repairs and the, whatever else happened to have it happen to your car, those are owner distributions. You don't get to take the actual expenses as well. So sometimes people will just be automatically putting all of the gas purchases and whatever they're making for their business into the expense account. Well, basically what happens is on 1231, we're going to zero all the actual expenses and we're going to calculate the mileage back on. You get one or the other, but not both. So that's what I would do. So actual expenses go into distributions, mileage calculation goes to expense.
And just maybe a quick rule of thumb, usually depreciating a vehicle is the way to go. If you have a vehicle that isn't worth much money, or if you drive a lot of miles, then oftentimes mileage can be better, particularly if you're driving a lot of miles. Most people, though, if you're driving a newer car and you don't drive a lot of miles for business, you're usually going to take a depreciation versus the actual mileage.
Yeah, and your tax person will be able to help you. You can come back on Tuesday and Thursday and ask Gene what might be better for you. If you have multiple businesses, it might be that they're like, well, we're depreciating the vehicle at 75% business use in this main business, and then you have some minor for the properties or whatever. So you're going to each have your own situation, but yeah, most of the time we're going to lean towards doing actual with actual auto depreciation, in which case there's a whole bunch of other stuff that comes with that, setting up the auto loan and making sure you got the auto interest in there and getting all the real expenses.
Paul says, again, it's a little bit more of a tax question, but I think I can hit this one. I used to drive a lot and use mileage deduction, but now I drive less. Can I switch to the expense format for a car that started without using mileage? The answer is no. Once you pick a stream, you have to stay in that stream. Now, if I get a different vehicle, I can change. But if I have my truck that I just bought, for example, this year, I'm going to this year choose, am I going to use mileage or am I going to depreciate this? And then I am stuck with that until I get a different vehicle. So that's the scenario there. Where do you document the tax prep fee? This bill should be itemized. So I'm assuming you're saying where in your books. If I get a tax prep fee, where would I put that fee in my books here, Lisa?
Right. So if your S corporation gets taxed separately than your personal tax return, of course, that's going to be a little more obvious. You might be talking about either you're a Schedule C or they just gave you one bill for everything. I don't know that I have ever taken a lot of time to break up someone's 1040 versus their personal. If you wanted to be very, very, very specific, then you could probably get an itemization from the tax company. Like Tax Hive could say, this is how much we would have charged you for the S Corp. This is how much we would have charged you for the 1040. You got a combo price where we gave you a discount. So here you can apply the discount between the two. So here would be business and here could be inferred as 1040. I'm going to let your tax preparer talk about exactly what they might say to the Internal Revenue Service if explaining why we didn't break up the payment and we put the whole thing under business, is because anyone who has filed a business tax return knows that the second you open a business, even if 100% of the bill is not your personal stuff, the vast majority of the hard stuff on that 1040 is because of your business. We have complicated your tax life because you're a business now. That complicated your tax life. So your 1040 is not simple. You are not TurboTaxing that thing at home. We're not like, here's your K1, now go home and do your 1040. You're going to be like, I have questions. This is not easy. So your 1040 became complicated because of your business. So we just put the whole thing on there because it probably wouldn't cost as much to do it if you didn't have the business flowing into it, associated with it as part of it. So I would just put the whole bill straight to accounting and you might have legal and professional expense in your business. You might have some sub accounts that are very specific to accounting fees, professional fees, anything like that. Right. Office expense, if you really, really, really don't have a chart of accounts that's spelled out, that's fine.
Yeah. Gold says, I mainly do private lending for my business. I've been keeping my expenses and profit on an Excel sheet mainly. Should I be using QuickBooks if the main source of income is only interest payments and doesn't fluctuate?
The main reason why I really like to push people towards using the automated accounting systems, even if you find a free one, is because the features now allow you to connect the various accounts you use for the business and let those transactions flow in. You can then go in and it helps you remember how you want to categorize them. You're going to create reports easier. But what I think usually ends up happening with people, and I have yet to see an Excel sheet that is actually accurate, when you are cherry picking through your various statements of which expenses flow here, you either duplicate or you omit, and it's more often the omit, some of the items onto the report. Also, then you're creating this Excel sheet that might look like your tax guy looks at it and goes, I don't know what to do with this. It might make sense to you, but it doesn't make sense to us for the purpose of tax preparation. And when there's a confusion and you guys cannot bridge the gap, your tax person might be like, okay, I'm just going to do my best. You might end up missing some of the expenses. So utilizing one of those softwares to not only get it into the format that we're most used to seeing for tax prep, but also when you're importing them from the bank account, you are not going to see as many things missed because it's pulling them in. You see them all on the screen. You have to do something with it to get it off the screen. And we're all like driven by that compulsion to clear the screen. And so do that. And then you know all the transactions have gone somewhere. Even if you're like, that was personal. That's personal. Oh, this one. Oh, I forgot about that one. That's an office expense we're going to put over here. Oh, I know. Yeah, when I went to TJ Maxx, I actually needed to buy this and this for the business. That wasn't personal. That's going to be better than the Excel sheet. And there's just a lot of reasons. So
I
make
think
the time, learn the software. I highly recommend.
I think the one thing that I would say is I often talk to Gene, and his answer to this doesn't deviate. I wish it would, but I say, you know, what's the number one reason you see people overpaying taxes? And his immediate answer every time is bad bookkeeping. And so, you know, could you hypothetically chart things and track things in Excel? The answer is yes. But our experience just dictates that you are the unicorn if you actually keep things correct in Excel. And the what is it? The $30 a month it costs to use the basic version of QuickBooks. It doesn't take many issues for it to be worth the $360 a year or whatever the number is. And so I think that's where our experience just dictates that Excel does not do a very good job. And human nature, we mess things up when we use Excel. The features of QuickBooks, or even again, you don't want to use QuickBooks, a Zoho or a Xero or something. They're designed to help keep you on track. They're designed to kind of have some safety checks in place to make sure that you're doing things right. So that's great. We're all out of questions, so we'll hang on for another minute or two if there's another question or two. But while we have a minute, I would say this: our plea on every bookkeeping webinar is to do your books. At the end of the day, we do this every other week because bookkeeping matters. And we know that if you're going to make good decisions in your business, you need good information, which requires good books. And come tax time, if we're really going to help you maximize your tax return, you're going to need good books. So our plea is to do a good job keeping books, keep them up to date. Doing them 8 months in the rear, you have a hard time remembering what was for what. So keep them up to date. If there's anybody on here, you know, we've got a good crew on here today. We've got about 30 people. If any of you feel like, man, my books aren't where they need to be, or perhaps I'm just sick and tired of doing books and you would like us to discuss what it would take to take over your books, just type your name and your phone number in the Q&A box, and I'll have a member of the team reach out to have a conversation with you. Please, though, make sure to include your phone number. Some of you, I have your name, or you might even say anonymous. And if you put it in there, if it doesn't match exactly back to what we have on our records, I can't find you. So if any of you are off, if any of you feel you need some help with your books, please just put your name and your phone number in the Q&A box. I'll have a member of the team reach out and have a quick conversation with you to see what we can do. So Akarsh, you're very kind. Thank you. I'll dismiss that. It's not really a question. It's just a good job, Lisa, for you. So thanks. Beatrice, there's actually a lot to your question. This is a tax question about charitable contributions. This not actually a really simple question. There's a lot to unpack there. So Beatrice, I'm going to ask you to come back Tuesday or Wednesday to an Ask a Pro, and with Gene, Will, Garrett, and get that question answered. You're going to want to unpack that. So come back. Yeah, Kelly, the short answer is we don't like Excel because the bottom line is almost inevitably, I'm not going to say 100% of the time, but with extremely rare exception, we find that Excel does not help us keep accurate books. There's all sorts of reasons why it causes issues, but yeah. So again, anonymous, this is really a question about, are certain things tax deductible? Um, your question is really on the gray line about whether or not this is or isn't tax deductible. Come back Tuesday or Wednesday again on an Ask a Pro and let Gene, Garrett, and Will unpack that with you. Making things deductible, like the questions about making makeup and hair deductible, that is a really problematic area most of the time. There has to be some real clear reasons that this is different than my normal makeup and my normal hair. And so come back Tuesday, Wednesday and unpack that. I think we've got everybody squared away. Kelly certainly will reach out and give you a call and have a conversation with you. And we would love to have a conversation, see what we can do to help you. All income is non-tax stipend and you hire a family member to work part-time. Kelly, I don't quite know what your question is. Again, though, this is right up the tax, whatever it is, that's up the tax prep pipeline, not the book pipeline. So maybe just kind of facilitate in your head what it is that you would want to unpack and then come back and pay or ask in the Ask a Pro.
Yeah, to speak to Kelly's thing there for a minute, I think you definitely want to talk to the tax people. You might be stumbling into household employee territory where you just have to show that you receive the money, but it's not taxable, but you might have household employee related filings that have to actually be filed on payroll tax returns. You could have a bunch of different things there about how that happens. I would talk to your tax pros. We want to figure out that part. But then once, for anyone here who had tax specific items and you're like, okay, we've defined what needs to be recorded on specific forms, you're just going to use your chart of accounts in any accounting platform you use, or even if it's very, very, very small and you stick with Excel, you're just going to create the expense accounts pretty much to agree to whatever form you have to file so that you can categorize those items into that. So Kelly, good luck getting all that sorted
The one
out.
thing I would
So.
say too, Kelly has a question about if I hire someone to help with some care and I'm getting paid a stipend that's not taxable. The issue here, because this isn't a business you're running, but the person who's doing the work for you is hypothetically running a business. That person may want to set up a business entity and log that money, but me paying that's not my business paying that. Again, I'm getting money that's non-taxable. I'm not reporting it. I'm using part of that to pay someone to help out. That person helping may very well want to set up a business and treat that as business income, but me as the person paying it, it's not really a business expense. So, yeah, the answer again is yes. The question is, do you guys help with bookkeeping? Again, we do. So if you don't have your books in order, or if you want help because you're sick and tired of doing your books and you want us to talk about taking that over for you, just put your name and your phone number in the Q&A box and I'll have a member of the team reach out to have a conversation with you. So anonymous, I hope that gives you the answer that you're looking for. So throw your name and your phone number in the Q&A box and we'll be happy to have a conversation. Lisa, as always, great job. Thanks for your time. We look forward to seeing you again Tuesdays and Wednesdays. Come back for Ask a Pros. Ask any questions in that format about advisory questions, about implementing a tax strategy, taxable situations. Keep an eye out for Ask a Bookkeeper for bookkeeping questions every other week. And we will be back soon. Everybody take care. Lisa, have a great day.
You too. Bye.